This is the Asia Trade. I'm Shery in Seoul.
And I'm Avril in Tokyo. Your top stories this hour. Asian markets set for a weak open as Wall Street slips from all-time highs. Comments from Fed Chair Jay Powell giving no indication whether he'll support a further rate cut next month. Chip makers in focus as Micron gives an upbeat forecast helped by demand for AI equipment. Also ahead, President Trump says NATO nations should shoot down Russian aircraft violating their airspace. And Super Typhoon Ragasa lashing Hong Kong with destructive winds and torrential rain. The city's highest level storm warning now in force.
And we'll be watching all of the developments in Hong Kong as we're also seeing Japan coming back online after a holiday and Nikkei futures at the moment holding steady. Of course, we are already at record highs. The Japanese yen has held steady throughout the week. What we'll be watching is JGBs because we continue to hear the latest rhetoric coming from front runner in the leadership race there, Sanae Takaichi, talking about perhaps the need to issue more bonds in order to finance measures to fight inflation. We have seen yields in the long end already at multi-year highs. And of course, the Bank of Japan continuing to normalize policy. When it comes to Sydney futures to the downside, but do watch out the miners. We have seen President Trump speeding up his efforts in order to build a critical mineral supply chain locally in the United States with a Canadian company. And we're also watching, of course, South Korea back online today in about an hour or so. And we have seen consumer confidence here also dropping for the first time in 4 months, Avril.
Yeah, and geopolitics also in the backdrop, Shery. I mean, think about how Trump has signaled a bit of a shift in stance when it comes to NATO and Ukraine, saying that they can take back land. We're seeing bullish momentum coming through in oil. And interesting also how treasuries climbed after a couple of sessions of declines. We did see the Mag 7s, a gauge of them declining 1.5%. Tech really was a drag on Wall Street overnight. Overall, the indices were lower, and this is against the backdrop, of course, of what we heard from Powell. Take a listen.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen.
And over in New York, the UN General Assembly continues. There, Ukrainian President Volodymyr Zelensky now saying that he was surprised by President Trump's social media post, saying his country could win the war with Russia. It came after the two leaders met on the sidelines of the UNGA, where Trump made a fresh push for peace in his address to world leaders.
In the event that Russia is not ready to make a deal to end the war, then the United States is fully prepared to impose a very strong round of powerful tariffs, which would stop the bloodshed, I believe, very quickly.
Let's bring in Bloomberg's Michael Heath. Mike, are we sensing a more sympathetic rhetoric towards Ukraine and perhaps an increasingly critical one of Russia from President Trump?
Yeah, it's definitely, Shery. It's it sort of waxes and wanes a bit with the president, but certainly in this case, his comments that that NATO should be prepared to shoot down Russian planes if there are incursions in NATO airspace, and certainly his comments that Ukraine could win this war. It's really quite surprising because he certainly hasn't said that before. As far as I'm aware, that Ukraine's in that position. He's always been saying that Ukraine needs to make a deal with Russia. So, it's certainly a new front. Again, though, when we listen to his comments at the United Nations, there's a lot of rhetoric there, but he's said these things before. He's set deadlines, etc. So it's probably not going to be taken terribly seriously in Moscow. But nonetheless, it's a shot in the arm for Ukraine and for President Zelensky, who's had to grapple with a pretty difficult situation of having the US, which has always been sort of the leader leader of the free world suddenly, for a period there at least, looking like it was supporting the enemy of the free world there with Moscow. So it's sort of a realignment into what the US, has traditionally believed and what it's sought to do. I guess we'll just have to see how the rubber hits the road there on whether anything more happens. But there's a change of sentiment, it seems.
Mike, you talk about some of these deadlines and the rhetoric. We're also hearing from the EU and how Commissioner von der Leyen thinks, they could stop some of these Russian energy purchases by the end of the year. Is this realistic? What should we be watching out for?
Yeah, I mean, it's a really interesting one because, and just to go back to President Trump for a moment, in his social media post, he mentioned that Russia's economy is in big trouble, and he's really not mistaken there. I mean, they've had this sort of mini boom during the war where their old Soviet, military-industrial complexes rebooted, but that's sort of coming to an end now, and there's all sorts of problems in the economy. So the possibility of reducing oil revenue there would be really, really interesting to see what happened. I mean, part of the problem is that it's countries like Hungary that are sort of a bit renegade within the EU and sort of gravitate a bit more towards MAGA-style politics and President Trump-style politics. So they sort of need these countries to come on board. But it does seem like that with these incursions, there's a general sort of tightening of Europe there to try to really put the squeeze on Russia. So I don't doubt that outside of I think it's Hungary and Slovakia that are still taking quite a bit of oil. That outside of those two, that the rest of them will really push to try and get this done early, yes.
I mean, to that point of unity among global leaders, we heard Mark Carney, along with Volodymyr Zelensky, asking for the return of abducted Ukrainian children by Russia. How united is the front on a global scale against this invasion right now?
Yeah, I mean, I think it is. It's really united, and the highlighting of the abducted children is number one. It's really, really important because it's just a terrible, terrible situation that's gone on there, where basically Russian forces have come in. I mean, a lot of these children are sort of either they come from orphanages or they come from lower socio-economic areas, or their caregivers have died. But there have also been cases where parents have been separated from their children. So not only is Russia taking these Ukrainian children, they're also trying to indoctrinate them and sort of strip out their Ukrainian identity there too. So it's actually been, the criminal court sort of said this is a war crime, and that's one of the things that are outstanding for President Vladimir Putin and for Russia's their commissioner for children, that the ICC has sort of put something out for them. So it's significant. It also sort of plays to the US too, the Republican side and the family values. This idea of Russia breaking up Ukrainian families or taking children to another country. There's a strong sentimental issue there, and it resonates with the US, and I think everybody sort of feels that. And even Melania Trump the First Lady, had written to President Vladimir Putin, to talk about these children as well. So I think there is a real sense of unity, and Ukraine is in the spotlight at the moment, which is important, and it needs that morale boost at the moment too, because it's finding it hard on the battlefront. Russia is stronger at the moment, and just to come back to what President Trump said there about Ukraine being able to win the war, because the defender is generally stronger in this war, actually taking back that territory is going to be incredibly difficult without a lot of sophisticated weaponry. But nonetheless, for Ukraine, this is a real shot in the arm, and I think it's very timely for them as well.
Yeah, Zelensky calling this a potential game changer for ending the war when it comes to President Trump's backing. Bloomberg's Michael Heath there with the latest. And President Trump also taking the chance at the UN General Assembly to rebuke the United Nations and other countries in his address to the UNGA on issues ranging from climate and immigration to Palestine.
Some of this body is seeking to unilaterally recognize a Palestinian state. The rewards would be too great for Hamas terrorists for their atrocities. This would be a reward for these horrible atrocities.
Let's bring in Bloomberg White House correspondent Skylar Woodhouse. And Skylar, really the president didn't mince words when it came to criticism for the United Nations and even going against protocol, naming individual countries.
Absolutely, Shery. I mean, this speech today from the president was in line with how President Trump usually goes about his speeches. It was rather combative. He accused the world body of offering nothing but, quote, empty words. He called climate change a, quote, con job. So this was sort of right in line with what we traditionally, see from President Trump in terms of how he gives his speeches. He's usually very combative, but obviously, given he was, speaking in front of, all of the global leaders, usually from other, past U.S. presidents, we hear calls, for unity. But, President Trump definitely struck a different tone today as he sort of, criticized the United Nations. There was an escalator glitch as he was walking to go do his speech where the escalator sort of stopped and he had to walk up. He was also talking about teleprompter issues. So this was sort of, if you're not one who's familiar with listening to President Trump, you might think this was a bit off of the beaten path. But this is traditionally in line with how the president goes about giving speeches.
Also kind of in line and on brand with the president is how he's been reforming things in the U.S., including the H-1B visa program. What is he looking to accomplish? Because now we're hearing there could be the prioritization of higher earners.
Absolutely. I mean, for President Trump, he talked about the border crackdown on the campaign trail. It is one of the main talking points of his second term in office as he's cracking down on the border. We've seen the administration so far go about different ways to sort of crack down on different immigration policies throughout the country. So this is sort of the next step in what we're seeing right now. It definitely, is setting a tone that the administration is looking to basically have as much control as possible in terms of, visas. And that's what we're seeing right now with the shift with the H-1B1 visas and how they're going about, what that new, application process is going to look like, how much they're going to cost. And then obviously within that, who they're prioritizing, who they're not prioritizing is just sort of the next step in terms of the administration, sort of reeling in that control as they navigate their border crackdown.
Bloomberg White House correspondent Skylar Woodhouse there with the latest from Washington. And another story that we're following, the OECD now saying that the global economy is still on course for a substantial hit from President Trump's trade measures, despite showing greater resilience than expected in recent months. The organization lowered its 2026 global growth outlook to 2.9% from 3.2% this year, and also sees slower expansions in the U.S., Euro area, and China. The OECD notes that the full impact of higher U.S. tariffs has yet to be felt.
The tariff shock is bringing more inflationary pressures in many countries. So we expect that there will be additional price impacts for firms, not only in the United States, but other parts of the world too. So I do think that the overall picture is one in which you have additional inflationary pressures from tariffs.
Coming up on the Asia trade, more on President Trump's support for NATO against Russia with geopolitical futures. We talk Asia investment strategy with Aegon Asset Management, and we assess Japan and Korea's prospects of winning better U.S. trade deals. Much more ahead. This is Bloomberg. Fed Chair Jerome Powell has reiterated his view that near-term risks to inflation and the labor market pose a difficult situation for policymakers, while offering no hints on the central bank's future rate path. Our senior editor for markets and Bloomberg opinion columnist, John Authers, joins us in Tokyo for more. So, John, good to see you in the Tokyo studio.
It's a delight to be here. Yes, sitting in Shery's seat or something like that.
It's great to see you in the studio.
Yes.
Let's talk about the Fed. I mean, when you look at what Powell said overnight, he's not saying anything materially new. He's flagging risks on both sides, inflation and labor market weakness. I mean, what do you make of the messaging?
Well, in the context of the Fed, the messaging continues to matter. He could have started making much more of a fuss about unemployment, and he's not doing that, and he is still seeing the situation as being balanced. we've had various Powell pivots, as they tend to get known, in his 8 years in charge. If he was very clearly convinced that he was going to need to keep cutting from here, he would be saying so. It looks to me as though he is somewhat more confident than he was a week ago. There's obviously immense amounts of politics flowing around the Fed at the moment. There's going to be an almighty battle over exactly how independent it's allowed to be once he stands down. But I think he feels that he's more or less back in control of the situation, or he wouldn't have been that open-minded.
Do you think they should cut in October? Probably.
But I don't regard it as a completely done deal. They say they're data dependent, and they should be. I imagine the data are going to move such that you do want to cut again. But the tariff input is in there in the inflation data. It's only very minor. If you see that begin to pick up very significantly, then you do probably have a picture, a very serious problem for the Fed when you've got stagflation, and they probably do have to arrest the decline there and then.
The other thing about tariffs and inflation is how China seems to be flooding markets with their goods.
Yes.
Are we already seeing these signs of this China shock 2.0, 3.0, and how severe might that be for Asian economies and perhaps markets?
This is only my third day here in Tokyo. I have heard about that from more or less everybody I've spoken to. So you can certainly see that this is something that's happening. It's something that was predictable. A lot of countries in this region have a pretty strong need to stay friendly with China, and they're unlikely to push back unless they really have to. You do ultimately have the possibility of very serious negative outcomes for the US eventually out of this. For the time being, the critical factor, which more or less ensures that the US isn't going to do anything, isn't going to change its posture, is that it's making a lot of money out of it. If you look at the revenues they've derived from tariffs, it's very impressive. It's getting on for a quarter of what they get from personal income tax already. That is difficult to forsake. It does make all the fiscal problems in the US that much easier to deal with. Of course, it means if you're taking that much revenue, it means you haven't had the desired effect of actually choking off imports, of protecting the businesses at home. But you are still making money. So I suspect the US is locked into this path for a while. And everybody else is going to do, led obviously by China, by far the most powerful economy outside of the US. Everybody else is going to do exactly what you think they would do, which is find somebody other than the US to sell to.
When it comes to revenues, it's tariffs, maybe also chip revenues for the US,
yes.
Maybe H-1B visas as well,
yes.
To some extent. How much does all this help to allay the concerns on the long end of the curve?
Oh, that's an interesting one. I guess it does help a little. You just need to look at the performance of the long end of the curve in the last month or two. The risk of a big jump beyond 5% is definitely looks much lower for the time being. Again, a lot depends on exactly how companies and the economy accommodates the tariffs. If you do see a renewed pickup in inflation, that's going to make people very concerned. If you see a successful push for much lower rates, i.e. if you see the Treasury, the government, forcing people to lend them at low rates, obviously they really can have some degree of impact over the short end, and you would therefore expect the long end to rise. So in itself, yes, it definitely does alleviate the pressure on the long end. And this is one of the big things you have to say. The Trump administration wanted a weaker dollar, lower long bond yields, and cheaper oil. And it's getting all of them, which for the time being certainly explains the degree of confidence you have in the US that they can continue doing what they're doing.
So taking some of the boxes that the Trump administration wants in terms of market reaction, What about when it comes to investment pledges? I mean, we're here in Japan.
Yes.
Hundreds of $1 billion worth from both Japan and South Korea that are being asked for, but light on details. We had the immigration raids in the US on South Korean factories. I mean, how realistic are you expecting these pledges to come in?
I'm not. Really, I mean, this is the thing about any trade deal like this. The World Trade Organization deals with, they had 2-year cycles between the major WTO meetings because that's how long it takes to thrash out the details of a real trade deal with all the definitions that are involved. I think the last I heard, NVIDIA still don't know the details of exactly what revenue they're going to be coughing over to the US, for example, and that's the biggest, most powerful company in the US, still doesn't know exactly what the deal is with its own government. The Japanese and Korean governments don't need my advice. I wouldn't be relying on any deal like that, and I would definitely be continuing, if I were them, with Plan B of working out a way of surviving without doing so much business with the US. And you mentioned H-1B visas. Again, it's early days in the response, but my impression at the moment is that if you're really going to have to pay $100,000 to bring somebody over to do skilled work in the States, that will work from the point of view of helping US workers. It won't raise them any revenue. It just means that a lot of people are going to have to find ways to deploy themselves in their home countries.
Yeah, and companies and workers are going to be doing that cost-benefit analysis as we go as well.
I mean, it could be perversely good for the likes of India and China, but it's certainly a mess for the foreseeable future.
John, it's been really great to chat with you. Thanks so much for your insights. Our senior editor for markets and Bloomberg opinion columnist John Authors. Shery?
Right, Avril, and here are some of the latest stories from the corporate front as well. Shares of Lithium America soaring in extended trading in New York. That's after Reuters reported that the Trump administration is seeking an equity stake of as much as 10%. Sources also told Bloomberg that the U.S. is reevaluating a $2.3 billion loan to the firm approved by President Biden to develop a Nevada lithium deposit. Tether Holdings is said to be in talks with investors to raise as much as $20 billion. Sources say the El Salvador-based crypto firm is seeking the funds for a roughly 3% stake through a private placement. That could value the issuer of the world's largest stablecoin at around $500 billion, ranking it among the world's most valuable private companies. Nexstar Media is joining Sinclair in refusing to show Jimmy Kimmel's return to broadcasting. The company is covering nearly a quarter of U.S. households won't air the late-night show on Tuesday, U.S. time. Sinclair says it will run news programming instead. Disney's ABC network has lifted Kimmel's suspension over remarks he made about the murder of right-wing activist Charlie Kirk. We have more ahead on the Asia trade. This is Bloomberg. We're watching Super Typhoon Ragasa raging through Hong Kong. We're talking about destructive winds and rain. The Hong Kong Observatory now raising the alarm there to hurricane signal 10. And you can see on the left side, those are live images. You can barely see out the window right now. Water levels could rise as much as 2 meters. And this is the most destructive storm since 2018 that's already raged through the Philippines, Luzon Islands, in Taiwan. Thousands of households have already lost power. Insurance claims back in 2018 were almost $600 million. We'll continue to watch the developments.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it. But I feel that way. I really do feel that way. Let them get their land back. Yep. So we'll see how it all works out.
President Trump expressing support for Ukraine. He also says NATO nations should shoot down Russian aircraft that violate their airspace, as he struck that more sympathetic tone on Ukraine's chances of winning the war. With us now is George Friedman, chairman at Geopolitical Futures. Really good to see you, George. So we have a bit of a shift in the signaling from Trump on NATO versus Russia and on Ukraine, but as is typical with Trump, it's difficult to decipher what is rhetoric, what is actually a shift in stance. What do you make of this?
Well, I think it's a shift in Putin's stance. He'd been signaling continually that he was going to enter into serious negotiations. He finally came to the summit in Alaska. He failed to engage in serious negotiations. And now the president of the United States has shifted his own position to a more hostile one. If they're not going to negotiate a peace settlement, he will aid Ukraine.
At the same time, we know how he has been reiterating, Trump, that European nations should stop their purchase of Russian oil energy. Otherwise, we could see tariffs, could see more sanctions. What is your assessment of the economic constraints that Russia faces at the moment? Is this going to be enough to tip the war?
Well, I think it was already tipped in the sense that the decision is made that that Putin is not going to end the war, that he's going to try to continue to win it. The fighting is going on. It's still static fundamentally. They've only taken 20% of the country. But on the other hand, he essentially betrayed his word to Trump, and said instead of negotiating that he's going to continue the war no matter what. This inherently changes its position in the United States. It's going to be much more involved, I suspect, and more on the side of the Ukrainians, no longer a neutral negotiator.
So what will be the breaking point then? Because, I mean, if Russia could have won the war, they would have. It's the military capabilities of Russia against stronger than expected Ukraine. So if you have a little bit more backing from President Trump, whether it's rhetoric or on the ground, what will make the difference? And how long could this take? It's already been 3 years.
Well, this is the problem with Putin. He has lost this war. He never expected to have been fighting this long, this hard, this difficulty. If he ends the war on these terms, he was defeated, and his political future inside of Russia is questionable. He led the country into a terrible situation. From the standpoint of Trump, if he was willing to negotiate a reasonable settlement, he would be willing to negotiate with the Ukrainians or pressure them in some ways, but he's not prepared to do that. So now he's going to face a United States that has shifted its strategy away from negotiations because he was rejected in negotiations and is now willing to supply significant help and European help as well to the Ukrainians in order to regain the territory. He's said that publicly.
What form will the cooperation between the European allies and the Trump administration could take as we head towards, hopefully, an end to this war?
Well, the aid we're giving the Ukrainians now is intelligence from satellites on moves of the Russians, and that's flowing to them. But at the same time, they can be provided with many more drones, many more weapons with which to defeat Russians. When you consider how poorly the Russians did, that after 3 years, this is all they have, a major strengthening of Ukraine could be very dangerous to them. So Putin, on the one hand, can't afford to end the war on these terms. I don't think he can afford to continue it either. The issue is not what Trump is going to do. The issue is what Putin is going to do now.
George, also at the General Assembly, we're hearing a number of countries. I mean, the Palestinian recognition now seems to be the global consensus. What is next for this war in Gaza?
Well, the Israelis have gone so far in alienating many nations, and many inside of Israel, that I don't think they're in a position to end it. So for an extended period of time, this war will go on. Because at this point, Netanyahu is in so deep he can't move. As for the Europeans shifting their position, it's on the Palestinians. It's not only understandable, that they're doing it, it also is another defeat for Netanyahu, even greater than what Hamas did, which is for the first time there's a major movement amongst major countries for a two-state solution. Now, the Palestinians have also rejected the two-state solution, so now the question is, with the Palestinians, will they accept the European recognition and ask for a two-state solution? And that's really the question, because in that case, Israel may be forced to capitulate on this.
George, talk about alienating countries. I mean, President Trump really breaking away from protocol, not only, of course, criticizing the United Nations, but naming countries when it comes to criticism over everything from geopolitics, immigration, several different issues. When you don't have the United States anymore as the leader of the free world, what happens to the balance of power around the world? And does geopolitics become more dangerous, something like leading to World War I, leading to World War II, where you had a multipolar sort of balance of power? What happens next when it comes to this sort of turning point in global geopolitics?
Well, it really depends on what the countries that want to be led instead of and are now being asked to lead themselves, what they do. I mean, the United States has been in a position as a global leader for 80 years. We've been involved in many wars under those circumstances. We've been involved in many economic dysfunctions. We created a trading system based on the strengthening of our allies. It is reasonable for the United States to want to shift that relationship. The burden of leadership has not been pleasant for the United States. And at this point, it would be very interesting to see some other nations bear that burden. And in this sense, when you speak about the Americans in leadership, we didn't select that role. When we stayed in 80 years, we want to moderate it. There is a substantial amount of support in the United States for reducing our responsibilities in the world.
All this is creating an opening for China. But to what extent do you think it is going to step into that role, given how it also has domestic economic troubles at home?
Well, it has enormous problems because the United States is 1/4 of the world's economy, and they depended on it for imports. Secondly, stepping into that role means that you have followers. It was one thing to follow the United States after World War II and through the Cold War. There were definite benefits, and there's a safety lever there that the United States did not want to control you too deeply. Following China is a very different matter to many countries. So there's a fundamental geopolitical shift where countries have to lead themselves. They will have to take their own roles and stop shifting the responsibility of leadership to other countries. If they want to be led by the Chinese, well, that will be their choice. But the real shift here is to stop putting the responsibility of the state of the world on the United States. And I don't think there's all that much opposition to that in the United States.
George Friedman, really good to have you with us for some perspective. He's the chairman at Geopolitical Futures, of course, taking us through some of those comments and what came out of the UN General Assembly. And it was interesting that in contrast to perhaps President Trump's comments when it comes to some of this criticism against the United Nations, South Korean President Lee Jae-myung paid tribute to the UN and multilateralism as a means to navigate challenges, including artificial intelligence, climate, and armed conflict. Lee, who took office in June, told the UN General Assembly his country is committed to seeking an end to military tensions with the North. Of course, the leader of a small country that it stands in a very precarious geopolitical position between major powers like Japan and China, and of course, North Korea as well. Take a listen.
Democratic Korea will begin a new journey toward peaceful coexistence and shared growth on the Korean Peninsula. The first step will be to restore broken inter-Korean trust and shift to a stance of mutual respect.
There's no question that despite these comments about multilateralism, demand is growing for more weaponry at a time of heightened geopolitical tensions, whether it's around North Korea and inter-Korean relations or the Middle East and, of course, the Russian war in Ukraine. And you can see the surge in some of those Korean defense stocks as well in the past year that has surpassed the gains of the Kospi. For example, Hanwha never stopped producing some of those conventional weapons and armored vehicles that are very popular now and in demand given the ongoing conflicts around the world, Avril.
Yeah, Shery, there are a couple of these other global stories that we're following as well. The Australian Prime Minister Anthony Albanese says he'll meet with President Trump next month in Washington, and that's months after a planned sit-down on the sidelines of a G7 meeting in Canada was cancelled due to Israel's conflict with Iran. Albanese had come under political pressure over his failure to secure a face-to-face meeting almost 9 months after Trump's return to the White House. The European Union and Indonesia have secured a trade deal that will eliminate tariffs on most goods. Officials from the two economies signed the deal known as a Comprehensive Economic Partnership Agreement, concluding nearly a decade of talks. The bloc's trade chief says the agreement will save European exporters around $700 million in tariffs. Shery.
We have seen some upside, Avril, when it comes to emerging market currencies because of the weakness of the greenback, but we have seen those gains perhaps a little bit more muted this week, although it's worth pointing out that we actually saw those gains in Latin American currencies during the UN General Assembly, especially led by the Brazilian real, because we heard from President Trump that he will be meeting with Brazilian President Lula next week. You can see it holding at that 528 level. A whole different story for the Indian rupee, because it's now trading at record lows. Of course, President Trump has been targeting India with tariffs and then also that surprise hike in visa fees for this country. So we'll continue to watch the different developments around these currencies, especially as we're also watching the Philippine peso, for example, after that super Typhoon Ragasa just raged through the country as well. This is Bloomberg. We're watching shares of Micron in late trade after the U.S. chipmaker gave an upbeat forecast for the current quarter. Its outlook shows that Micron has become a key beneficiary of AI spending. For more, let's bring in our Asia tech correspondent Annabelle Jewelers in Hong Kong. And Annabelle, so a strong set of results, strong guidance, and yet the uptick when it comes to late hour trading is not that big. Why?
Yeah, it's been a really interesting move in late trade, but just to recap those numbers, as you said, it was a pretty strong quarter. It was a strong quarter for Micron in terms of their forecast. So fiscal first quarter, they're expecting revenue to come in at $12.5 billion. That's quite ahead of what analysts had been saying at $11.9 billion. And profit per share is also expected to come in better than predicted. So strong outlook, and also it really underscores that continuing demand that we're seeing for HBM. So HBM, high bandwidth memory, we know it's an essential piece of AI infrastructure, and Micron has been a key supplier to NVIDIA alongside Samsung, SK Hynix, and it's continued to be a very lucrative part of the business. But as you said, even if these results underscore how much Micron has been a beneficiary out of all the spending on AI this year, the result in after hours trade is a little bit mixed. And I think that also just underscores the sort of optimism we've already seen in the share price this year, because the stock has more than or nearly doubled in price just over the past few months, and it's also risen at a far faster pace than a lot of its rivals. And I guess that's also why you're seeing that move in after hours looking a little bit more subdued. Much of it has already been priced in.
Belle, when it comes to chips, Taiwan has also announced it'll restrict chip exports to South Africa. What's behind that?
Yeah, it's quite an unusual step that Taiwan is taking here, but it is essentially a way that Taiwan or Taipei is using its tech dominance to try and put pressure, economic pressure on countries that continue to build closer ties into Beijing. So as you said, what has been announced is that the bulk or the majority of chip exports from Taiwan to South Africa will now require pre-approval, and this is being seen as a reaction to South Africa's own actions against Taiwan. So essentially, South Africa severed diplomatic ties with Taiwan back in 1997, but Taiwan has continued to have a representative office in the capital, Pretoria, in the years since. Johannesburg, though, South Africa has been putting pressure on Taiwan to shift that representative office back to Johannesburg. And it's something it's actually been trying to do since 2023, because that was the point where South Africa hosted the BRICS summit that Chinese President Xi Jinping attended. It's been increasing that pressure in recent months because South Africa is preparing to host the G20 summit in November of this year. Xi Jinping is also going to be there. So a way that Taiwan's trying to use its economic clout here, essentially, to try and put pressure on South Africa.
And Annabelle, this week we've been watching major upside when it comes to exuberance in the chip sector because of NVIDIA's $100 billion investment into OpenAI as well. And we're now hearing that data center partnership could have a sort of new business model.
Yeah, this is a really interesting move. So the headline this week was, yes, that NVIDIA could be investing up to $100 billion in OpenAI, and part of these efforts to build out data centers, essentially, that are needed for continuing to expand artificial intelligence technology. That would have required in the traditional structure for OpenAI or Oracle to buy NVIDIA chips. But what the information is reporting is that OpenAI could look to lease them instead. So it could be a way for NVIDIA to try and expand its customer base beyond sort of the hyperscalers like Microsoft or Alphabet, and try and build on customers who maybe don't have the financial resources to commit so much capital. For OpenAI, of course, it would also lessen their initial financial commitments, because instead of buying outright, they could lease instead. I mean, the information is saying it could cut the cost of server chips up to 15% compared to purchasing instead, but we don't really have any sense of how that's being calculated. And again, this is according to their sources, but it is certainly an interesting development in the way that deals could be structured moving forward, especially as NVIDIA, as I said, looks to broaden out its customer base as well.
Belle, thanks so much. Bloomberg Tech co-anchor Annabelle Jolis for us there. Now let's take a look at how commodities are faring. Of course, we have been keeping tabs on the geopolitical situation at the UNGA. Trump has signaled a bit more support for NATO versus Russia as well as Ukraine. And that seemed to have played out a little in the oil prices that after 4 sessions of declines actually surged. We are seeing the energy complex, including diesel, catch a bit of a bid. And overall, there seems to be some repositioning on the way. We did get the traders seeming to focus on how Ukraine struck Russian refineries. Taking a look at gold at 37.63 at the moment after hitting yet more record highs. Of course, this has been benefiting as an inflation hedge, Shery.
Yeah, Avril, we'll be watching some of those commodity names when trading starts in Japan, South Korea, and Australia as well, especially with lithium names in Australia. They could take a cue from a big move over in the U.S. Shares of Lithium Americas nearly doubling in late trade on news that the Trump administration is seeking an equity stake. Reuters reporting that it may be as large as 10%.
And among some of the stocks that we're also going to be watching, it's these semiconductor equipment makers in Japan when trading opens shortly. Don't forget, we have markets in Japan. They were just closed yesterday, so there's a bit of catching up to do. And this is against the backdrop of the slide that we saw in the Mag 7s overnight. So there are a couple of cross currents, especially since semiconductor equipment makers have been playing catch up to some of these AI market leaders, including SoftBank. Nikkei futures pointing to a sideways move at the start of trade for the moment. We'll have more on the Asia trade. This is Bloomberg.
Super Typhoon Ragasa lashing Hong Kong, the world's most powerful storm this year, will be closest to the city in the next couple of hours, packing maximum sustained winds of 195 kilometers per hour. The highest level hurricane signal, number 10, will remain in force for some time amid these destructive winds, heavy rain, water levels rising by as much as 2 meters. The China Show co-anchor Yvonne Man hunkered down in Hong Kong, joining us now over Zoom. Yvonne, so it looks pretty bad, and it looked pretty bad in Taiwan, in the Philippines. How's it going right now over in Hong Kong?
Yeah, Ragasa is the Filipino word for fast and, swift, right? And it's really, this typhoon is living up to its name right now, because it was almost like a flip of the switch. At around 2 a.m. this morning, I woke up, and I think that's when things started to get a bit shaky, right? And the buildings were certainly rattling, and we saw trees being toppled. We're talking now about sustained winds, as you mentioned, north of 200 kilometers per hour at one point. So certainly there is still a lot of concerns about the damage that we could see coming out of this, but we're still sort of in the thick of it right now. In fact, the winds I can hear outside my window are still howling right now. In terms of the impact, certainly that's going to be one thing to watch. As we've been talking about, this already has the potential to be as costly and as damaging as Mangkhut back in 2018. And we're already seeing a lot of disruptions, right? As of now, we're hearing a lot of traders, a lot of people are now hunkering down at home, just like me, but we're expecting to be working from home here. From what we're hearing from the exchange right now is that they're still going to keep things operational. So the markets will likely still be open here today, but certainly in terms of the disruptions to live, the city certainly has ground to a halt.
We'll watch to see if that affects trading in some way. But Yvonne, where does the storm go next?
Right. So it's not just a Hong Kong story, as we've been talking about. You mentioned about hitting Taiwan, Philippines first. We are now, the cyclone is closest to the city, I think around 100 kilometers or so. And it's really going to kind of skirt around the southern part of the financial hub. And then in terms of southern China, we've already seen the likes of Macau, Shenzhen, those airports are remaining closed for unforeseen period of time. We were talking about Guangdong province has also suspended their railway services, and the parts of the aluminum capital like Jiangmen, Foshan, those areas are going to be suspended as well. So we have seen already impact in the southern part of China, but we are expecting to hitting to Vietnam soon.
Yvonne, thanks so much. Our China Show co-anchor Yvonne Man. Markets open next. This is Bloomberg.
This is Asia Trade. We're counting down to Asia's major market opens, watching the tech sector Avril with a magnificent 7 falling in the overnight session, but Micron higher on strong results and guidance, and watching geopolitical headlines out of the UN General Assembly with rising tensions between NATO and Russia.
Yeah, and Trump, seemingly there is a shift in his rhetoric when it comes to NATO versus Russia, as well as Ukraine, saying that they can take back land. Does this represent a sort of shift when it comes to the war that is, of course, in its 3rd year? And as we track, you just talked about the tech sector. When Japan markets open, there's a lot that they will have to factor in, given how Japan markets were shut just a day ago. The Micron upbeat forecast, the Mag 7 performance, and how chip semiconductor equipment makers have been doing pretty well. Add to that how Hong Kong traders are hunkering down for a storm. Does this provide more cross currents when it comes to trade? For the moment, we are seeing the benchmarks in Japan looking pretty flat, and the yen also hovering steady at the 147.6 level. Of course, we also did see the greenback moving sideways for the most part. We are expecting some Japan PMIs later this hour, but Tokyo CPIs as well later in the week. And for the moment, we have been seeing investors sort of digesting the LDP race and what this could potentially mean for the BOJ's path. JGBs on the 10-year tracking what we saw in treasuries for the moment, a bit of a slightly higher uptick. Let's take a look at how Australia has opened, and we have been seeing how, along with gold prices minus the stocks that have been doing pretty well, the ASX 200 opening down 0.33%. This is in line with what we saw on Wall Street. The treasuries are extending their climb. Remember, this performance follows on from already overnight where they broke a 5-session losing streak, and this is despite Powell not quite letting on whether he would be supportive of an October rate cut, Shery.
And a little bit of a divergence when it comes to Korean markets right now, with the small cap Kosdaq under a little bit of pressure, but we have the Kospi being led higher by those energy stocks, with oil prices, of course, seeing some support given the geopolitical tensions between NATO and Russia. We're also following the defense stocks in the South Korean session, given that geopolitical rhetoric, President Lee Jae-myung wanting better relations with North Korea during his speech. We're also watching the chip sector as well, because we had some more positive commentary coming from Micron, and we know that a lot of these South Korean semiconductor firms do get revenue from Micron. You can see the Kospi now gaining 0.3%. As we're seeing a little bit of more upside on the Korean won against the US dollar, we have seen significant weakness on the Korean won recently, especially given that Korean people are investing more in overseas stocks, not to mention the uncertainty coming from those hundreds of billions of dollars of investment commitments into the US that could drive dollar demand, Avril.
Yes, Shery, so let's get some analysis from Jeff Grills, head of U.S. cross markets and emerging market debt at Aegon Asset Management. So we are seeing tech pulling back a little in the session on Wall Street. What do you make of this? Is this just a bit of a reprieve, a breather that we're seeing?
Yeah, I think this was in reaction to Jerome Powell's comments today, saying that he saw stocks as fairly valued and putting a little bit of a damper on what will be the ultimate rate cutting going forward. Our view is that this is just temporary. Keep in mind, we are near all-time highs, and whether you can debate the valuations, I don't know that we think that things are overvalued, but we are more optimistic going into 2026. We think U.S. growth can continue to accelerate after what is going to be a weak quarter. And with the Fed likely to continue cutting this year and into next year, that provides a very good backstop. They just want to make sure that they don't spur on an asset bubble, which is why I think you're seeing a little bit of a correction today.
When it comes to tech, how do you feel about some of the semiconductor equipment names or secondary trades that haven't received as much love in the past couple of years in the AI space?
Yeah, when it comes to semiconductors, there's been a lot of controversy in terms of just where is the proprietary nature of it. The U.S. wants to make sure that there's security around it. And so when you've seen other tech stocks, the Mag 7 going up, I mean, I do think eventually that will start to pull semiconductor stocks up. But overall, we continue to be very optimistic on where artificial intelligence is going. I'm a big believer that AI will continue to usher in a more productive worker and maybe a productivity period that will be very positive for economic growth. And so all of that should continue to benefit stocks over the medium term. Doesn't mean we won't have bits of volatility or some types of corrections, but in general, I think that will play through to semiconductor stocks, and generally the outlook for AI continues to be pretty robust.
You know, it was interesting to hear Chair Powell say that AI isn't necessarily the main factor weighing on jobs, as he was really focusing on the labor market. How many Fed rate cuts are you expecting this year, and what will that tell you about perhaps the structural divergence with some of the other major economies around the world, like China?
Well, we expect 2 more cuts for this year, so we expect a cut at each one of the meetings, and ultimately our path is somewhere into the 3.25–3% type of range by end of 2026. You know, I think the U.S. has the benefit of having been later than many of the other central banks. The ECB is at 2%. Bank of Japan has been in a hiking cycle. I think both of those central banks will be on pause. And China is this interesting situation going on where you have the old economy, the property sector still weakening, but China has made a massive investment into technology and other types of innovations that are going on. And I do think that that's going to ultimately benefit China in the near term. We're more cautious on where growth will ultimately come out in 25. We're closer to 4 to 4.5%, where markets are maybe upper 4s to 5%. But China still has so much stimulus that they can continue to pump in and will continue to try to put investments into tech as well.
The similar story from China, not to mention the tech exuberance and some of those AI-related names across Asia. Could they be supportive later in the year and also going into 2026 in an environment where their tariff impact has yet to be completely felt? The OECD is saying that that blow will come more in 2026 than now.
Well, I do think tariffs, at least when I think about the U.S. economy, I do think tariffs can have some sort of a negative impact. But keep in mind that with the bill that was passed earlier this summer in July, that we do expect a little bit of a significant boost from where tax rates will be for the consumer. And so you'll have that offsetting balance. And those tariffs are going to accumulate into the U.S. government, that there should be ability to maybe do some more spending, or at least not have the concerns that we've seen over deficits. And so all of that means that U.S. rates, in our opinion, are going to continue to trend lower, more likely in the front end, but even the back end, we think 4.5% for a 30-year. And that should be supportive for markets in general. China is going to remain a big competitor. And so we'll see what that does from competitive valuations, what type of technologies they announce. But we saw the scare with DeepSeek. But overall, we do still think that the overall spending and the overall direction for AI is continuing to be positive.
Jeff, just picking up on your point on how you still seem to think that the U.S. growth can be quite resilient, what do you make of the labor market weakness, and to what extent do you think these rate cuts coming in are going to be able to buffer the U.S. economy, given how we know monetary policy is a pretty blunt tool? I mean, there are structural issues at play as well.
Well, I think there are, again, AI, I think, is altering the labor market workforce, right? I mean, you're seeing younger workers who are struggling to get some of the jobs out of college. That's probably an AI-generated impediment to them. But I think that this is part of the transition that we'll need to see in the workforce, right? As we see more agentic AI, things that can create more productivity gains, the ability to use AI to do programming and analysis, all of that just takes time for people to learn. I mean, we have to remember that AI is still really in the early stages. It really appeared to most users 3 years ago, and even more recently in the last year. So I think the labor market will peak somewhere near here. We don't think the labor market's going to continue to go too far from here. And the Fed stimulus will continue to help. I think that will create what we see, a more resurgent growth in the U.S. Again, not massive. We're thinking 2% to 2.5% into 2026, but still U.S. being the leader over other developed countries in the world.
And Jeff, we continue to see gold and perhaps the crypto space supported, especially gold, near daily record highs at this point, with expectations of Fed rate cuts and, of course, all of the uncertainty geopolitically. At a time, though, when we are seeing more volatility in the crypto space, $1.5 billion of liquidations without a clear trigger, when you have to choose between these two hedges, wouldn't you just go with gold?
Well, I think for the conservative hedge, you would go with gold. And so our view is that gold will continue to rise. But when you think about where crypto can go and the use of that as an alternative store of value, I would say that the bigger gains can come in things like Bitcoin and other cryptocurrencies. Gold, it's all about, what is the accumulation? Central banks have been buying gold. You saw China today announcing that they're going to sit there and support further purchases of gold for other consumers. But I do think that the bigger upside is in crypto, but it's just got a lot more volatility. It's just more prone to the ups and downs that you referenced there. So people just need to be patient and continue to hold that.
And to some, the volatility in crypto can actually be good for them. They need that volatility to rally further. Jeff, good to chat. Thank you so much. Jeff Grills is head of U.S. cross markets and EM debt at Aegon Asset Management. Let's take a look at how some of the movers in the Australian stock markets are faring. We're keeping track of lithium miners that are climbing for the moment. This is against the backdrop of the Trump administration said to be seeking a stake in Lithium America. So we're seeing that positive development come through in stock market trade as well. More ahead on the Asia trade. This is Bloomberg.
Some of this body is seeking to unilaterally recognize a Palestinian state. The rewards would be too great for Hamas terrorists for their atrocities. This would be a reward for these horrible atrocities. In the event that Russia is not ready to make a deal to end the war, then the United States is fully prepared to impose a very strong round of powerful tariffs, which would stop the bloodshed, I believe, very quickly.
President Trump speaking at the UN General Assembly in New York, warning Russia on its ongoing war on Ukraine and the rising geopolitical tensions between Russia and NATO, really leading to that gain in defense stocks. Take a look at how South Korean defense names are faring at the moment. And you can see Hanwha Aerospace is the top mover on the Kospi, gaining more than 4%. We have seen the surge in global weaponry demand even before the UN General Assembly, of course, with the ongoing wars in Russia and Ukraine and the conflict in the Middle East. And expectations that this sort of warfare will shift to drones and AI. And we know that Hanwha, for example, produces conventional weapons and armored vehicles that are very much in demand these days. But let's discuss what's been happening at the UN General Assembly, especially with President Trump's comments that NATO nations should shoot down Russian aircraft that has violated their airspace. For more, let's bring in Bloomberg senior editor Derek Walbank. Derek, it seems that we continue to hear perhaps increasing criticism from President Trump on Russia and a more sympathetic tone on Ukraine as well.
Yeah, Shery, it's been a really interesting set of remarks from Donald Trump at the United Nations when you consider his overall sort of posture towards Ukraine. I think we all remember that Oval Office meeting with Vladimir Zelensky that went about as bad as anything could have gone. Trump later hosted Vladimir Putin in Alaska for a sit-down meeting. If we're sort of taking those baskets, and Trump has said for a long time, look, he thought that he could get this conflict potentially ended on day one of his presidency. If you sort of take all of that together and you think about where we are now with some of the comments that he was making today, suggesting that Ukraine could get basically all of its territory back that it may have lost over the last couple of years, really having a jab in at Putin, suggesting that NATO allies ought to consider downing Russian planes that stray into NATO airspace. This is a lot different in terms of tonality from the American president. But I don't want to keep this conversation just in the idea of tone, right? You should think of this not just as tone, but also like a permission structure from the president. We've got part of his, social media post on the screen right now. One of the things that we heard Trump suggest is that he's willing to continue to sell weapons to NATO. NATO will do what they wish with those sorts of things. And those NATO nations, mind you, are trying to buy things to give them to Ukraine or sell them to Ukraine and let Ukraine use them in the conflict with Russia. So you are seeing here not just a sort of shift in tone from the American president. Some have suggested that this is a bit of an exasperation with Vladimir Putin, who has so far steadfastly refused to meet with Vladimir Zelensky, has not relented in his prosecution of the war in Ukraine. But it's also a permission structure, and I think other allies of the United States are reading right into that.
Derek, aside from Russia, Ukraine, NATO, Trump also took to the stage, had a pretty combative speech, perhaps unsurprisingly when it comes to issues such as immigration, climate change.
Yeah, that's right, Avril. And look, this is a president who has long been critical of the United Nations. He has put UN envoys in place with the explicit goal of trying to shake up the institution. One thing that really struck me was when Donald Trump was talking about the idea of conflicts that he has been trying to solve. This is the foundation. He repeats it a lot, the foundation of his bid for a Nobel Peace Prize. But then he was suggested that the United Nations hasn't really been involved in a lot of that sort of stuff. And this is a president who leads a party that's been highly critical of the UN, sort of broadly, but mainly as a question of can it get things done? There's also been a criticism, of course, from Republicans about UN agencies and their sympathies via Israel and Palestinians that has come up in recent times. But this was really kind of a broadside. I also thought, and I'll close here, I thought it was really notable looking at other world leaders' reactions. They didn't get involved in a tete-a-tete. They just sort of stuck to their agendas and they pressed on with what they were going to do. Seems to be a template for how they're trying to all manage their relationships with Trump.
Derek, thanks so much. Great to chat. Bloomberg senior editor Derek Wallbank for us. Now, amid this geopolitical backdrop, we've been seeing gold rallying pretty hard, but it's taking a bit of a breather for the moment, despite being at those record highs. And along with that, I guess we're seeing that reaction as well, tracking these gold miners in Australia that seem to be following on from the declines on Wall Street overnight. Northern Star, Regis Resources among the losers that we're seeing on the Australian benchmark. Materials are actually reversing from the gains that we saw in the session yesterday. Energy is still continuing its outperformance. Traders are also weighing China's push to become a custodian of global reserves. For more, let's bring in Bloomberg's Greater China executive editor, John Liu, in Beijing. So, John, we are seeing these reserves from this Bloomberg scoop. What is the significance of this?
So maybe I can just first explain what we understand is happening. The Chinese central bank has been approaching other central banks around the world about potentially buying gold on the Shanghai Gold Exchange and then storing that gold in warehouses associated with the exchange. I think it's important to note that the Chinese central bank is not asking other central banks to ship their current holdings of gold to be stored in Shanghai. What they're saying is come to Shanghai, buy gold in Shanghai, store it in Shanghai. It's important because China is the world's largest producer. It's the world's largest consumer of gold, but its role in the global gold trade is still relatively small. London is the main hub for gold trading around the world. And if China were successful, and we understand that at least one Southeast Asian nation has expressed some interest in doing this, if China is successful in getting more central banks around the world to hold part of their gold reserves in Shanghai, that would mean a level of credibility and trust being bestowed on China and the city of Shanghai as a financial center. And it would add to the influence that China plays in not only the gold market around the world, but also in the global financial system.
Yeah, how does this latest move sort of play into Beijing's campaign that's been going on for years to depend less on the dollar and also internationalize the yuan?
So China's central bank has purchased gold for its reserves 10 months in a row, and it has at the same time continued to reduce its holdings of U.S. treasuries. And so that has been an ongoing process. It's sped up, as you mentioned earlier, after the war in Ukraine. There is this push by China to not only diversify, but to argue that the entire global financial system should not be so reliant on a single currency, in this instance, the U.S. dollar. But it is at the same time part of this push for China to play a bigger role in the global financial system. It is the world's largest, second biggest economy. But because China has a closed capital account, that means there is not as much capital flow coming in and out of the country. And as part of trying to overcome that hurdle to increase its influence. It's been trying to push greater use of the yuan around the world. And this would help do that if countries are coming to Shanghai, buying gold ostensibly in yuan potentially, and then storing it in Shanghai. It would help boost that endeavor.
John Liu there with this exclusive Bloomberg story joining us from Beijing. We have more ahead on the Asia trade. This is Bloomberg. Micron got a boost in late trade after the U.S. chipmaker gave an upbeat forecast for the current quarter. Its outlook shows that Micron has become a key beneficiary of AI spending. For more, let's bring in our Asia tech correspondent Annabelle Jewelers in Hong Kong. Annabelle, so the results look pretty solid, and also the guidance.
Yeah, really big focus on the guidance, and that's what investors were really paying attention to. But essentially, fiscal first quarter revenue tipped to come in at $12.5 billion. That's well ahead of what Wall Street had been expecting of $11.9 billion. And also profit per share came in better than expected for their guidance as well. So as you said, it sort of positions Micron as one of the big beneficiaries out of all of the spending we've seen on AI. Its key product, or one of its key products, is HBM, critical to AI infrastructure. High bandwidth memory, it competes with Samsung, also SK Hynix to sell into NVIDIA, for instance. Has become particularly lucrative for Micron as well. So you mentioned that reaction that we saw in after-hours trade. It was sort of fluctuating a little bit, but not huge gains. But it's important to remember as well, it's had a huge run-up the stock so far this year. Its price has nearly doubled. And so a lot of the good news as well has already been baked in at this point.
Bell, meanwhile, Taiwan has announced it'll restrict chip exports to South Africa. What's behind this?
This is quite an unusual step, but it essentially shows us how Taiwan is using its economic clout to try and pressure countries that are continuing to build closer relations to China. So, as you said, the focus here is these export curbs. So Taiwan is now going to be requiring pre-approval for the vast majority of chip exports to South Africa. It does follow the pressure, though, that South Africa is putting on Taiwan in the country as well, because Taiwan, even though the pair haven't had any diplomatic ties going back to 1997, has continued to maintain a representative office in Pretoria, the capital. South Africa wants them to move that back to Johannesburg. Taiwan has been resisting this, but essentially South Africa is stepping up the pressure because it's preparing to host the G20 summit in November, where President Xi Jinping is going to be. And so that is essentially how this has all come about.
And just quickly, we had big news on NVIDIA's investment in OpenAI, and we're now hearing that partnership could lead to a new business model.
Yeah, that's right. So this was the big news this week, that NVIDIA is going to be investing up to $100 billion into OpenAI. The idea is to buy NVIDIA chips to help build out its data centers. What the information says, though, is that instead of buying the chips, OpenAI could look to lease NVIDIA chips instead. The information says that could cut down the costs for OpenAI up to 15%. Unclear exactly how they came to that calculation, but it still could be an interesting business model for NVIDIA moving forward as it looks to expand its customer base beyond the hyperscalers like Microsoft, Alphabet, and also to reach new customers who might be interested also in products.
Belle, thanks for that. Much appreciated. Well. We got to go, unfortunately. Annabelle Jewelers for us there. This is Bloomberg. And we have data out of Japan, these PMIs for the preliminary September reading showing a contraction on the manufacturing front that is a little worse than the prior reading at 48.4. This is, of course, for the month of September, as I say. Services, of course, as we know, has been a bit more buoyant. So from the prior reading of 53.1, we're now seeing it at 53.0. That has been the more robust side when it comes to Japanese PMIs for manufacturing. Of course, this has been coming under pressure because of the impact from tariffs. Shery.
Right, Avril, and we continue to follow the latest from the UN General Assembly. South Korean President Lee Jae-myung says his country is committed to de-escalating tensions with North Korea. In his address to the UN General Assembly, Lee pledged to restore broken inter-Korean trust as he works towards a new era with Pyongyang, one he says will lead to renewed growth for both sides.
Democratic Korea will begin a new journey toward peaceful coexistence and shared growth on the Korean Peninsula. The first step will be to restore broken inter-Korean trust and shift to a stance of mutual respect.
And President Lee continues to negotiate South Korea's trade deal with the U.S., which includes a $350 billion investment package. There are still big questions about how the fund would operate. With us now is Dean Baker, senior economist at the Center for Economic and Policy Research. Dean, great to have you with us. You actually argue that the investment package is disproportionate to the potential benefits. Would it be cheaper to just pay the tariffs?
Certainly would be. I mean, if you look at this, I mean, just this simple arithmetic, we're talking about Korea putting up $85 billion a year. And then you say, okay, suppose it's a 25% tariff rather than a 15% tariff. That's what's on the table. That maybe makes a difference of 8, 9, at most 10 billion in terms of Korea's exports to the United States. So you're talking about paying $85 billion to increase your exports by at most 10 billion. That's just not a very good deal.
The idea is that you would get some of the proceeds and share them with the United States, not to mention the long-term foothold that South Korean firms would gain in the United States, right? But you're right. I mean, the tariffs haven't even come down to 15% because President Trump has not signed an executive order. With all of that uncertainty, how can South Korea negotiate a better deal?
Yeah, well, there's two issues here. One is, what exactly does the investment look like? I mean, if Korea is going to make the investment anyhow, well, that's of course fine. But that doesn't seem like what Trump has in mind. But the other point that you make, Trump doesn't feel bound by his commitments, and he says that. So it's not. It shouldn't be a surprise that you can make an agreement with Trump and he might feel differently 6 months, a year from now. So if Korea is putting the money on the table, that doesn't guarantee that whatever reduction in tariff they ostensibly agreed to is going to be there a year, 2 years, 3 years out. So to my view, that's a very risky venture.
And putting money on the table is especially the issue, right? Because we're talking about $350 billion that have to come from somewhere. People are saying that that could actually have repercussions in the foreign exchange market.
It's a huge amount of money for Korea. I mean, it's a huge amount of money for almost anyone. I mean, the United States, of course, is a huge economy, but even for the United States, it's a lot of money. So, yeah, I mean, Korea is really putting itself at risk. I mean, its economy isn't going to collapse, but it certainly could seriously impede its growth. And again, it means you'd have to acquire a lot of dollars over the next 4 years to cover this. So it's really a huge amount of risk for very, very dubious gain.
Dean, I was going to ask you, to your point about how the math is not mathing, what is your sense of whether there are options, though, for the likes of South Korea and Japan, even if it doesn't make sense for them, given how they might not be able to risk antagonizing someone who's going to be president for the next 3 years?
Well, there's a couple things. First off, on the economic front, you simply cannot rely on the U.S. as an export market. Maybe it'll be there, maybe it won't, but I think both countries have to be prepared to cushion their export industries. And I mean, rather than paying out $85 billion a year in the case of Korea, $135 billion in the case of Japan, use that money to cover unemployment insurance, short-time work, retraining, building up other industries. That would be the economic issue. Now, obviously, historically, Japan, Korea have relied on the United States as a protector, as a military ally. I don't think that could be counted on anymore. Again, Trump has been very clear that it's America first. Maybe he'll be there to defend if there's a military conflict. Maybe he'll be there, maybe he won't. I mean, we see that in Europe. NATO is our oldest alliance. It's just not clear. And he says this. I'm not trying to put words in his mouth. He says America first. We'll see. So you contrast that with what had been the position under presidents, Democrat, Republican. It didn't matter. They were airtight commitments to our allies. He's making it very clear, no longer the case.
These trade talks are still ongoing, though. It's also interesting how these immigration raids have sort of elicited a response from the U.S. in an apology from officials. Do you think this is going to be used as a sort of leverage or bargaining chip? And how do you see these negotiations progressing?
Well, I can't say how they're going to progress, but I mean, I think the raid, this is, of course, in Georgia where they arrested, whatever we want to say, detained, I think it was 500 Korean workers there. There is no respect for foreigners in the United States right now. And again, I'm not happy about that situation, but that's simply the reality. And again, this is stated administration policy. They say they have no rights. They can detain people. A lot of these people might be here legally. They don't care. They're not obligated to follow the ordinary rules that we would have followed in years past, even for people who weren't here legally. So that's just a reality. And again, I'm not happy about that. I don't know many people who are, but that they say that. That is the official position of the Department of Homeland Security.
When it comes to these immigration measures by the United States, the fact that the Trump administration is not only making it difficult for skilled foreign workers to come and invest in the country, but also trying to change the whole immigration system around H-1B visas. What are the long-term implications for the United States in terms of demographics and labor workforce needs?
There's been a lot of research. The H-1B visas, of course, are for skilled workers, and there's been a lot of research on the impact of that. They actually increase employment, particularly skilled workers. And of course, many people come here on H-1B visas. They eventually get residency, citizenship. Many have started businesses. It's really been tremendously beneficial to the United States. So to crack down on that, make it very difficult for people to come here, is certainly bad practice. Now, there are ways to reform it, because, for example, the minimum amount you have to pay people on H-1B visa, it's just $60,000 a year. These are supposed to be highly skilled workers. So 100,000, maybe 120. I mean, that would be a very reasonable reform. But to look to eliminate or make it much more difficult for people to come here on that program, that is really poor economics. And we will pay a price for it. Maybe not this year or next year, but over 5 or 10 years, we'll pay a price for that.
There seems to be a lot of criticism, though, on that specific H-1B lottery allocation, though, that is not really based on skills, that at least should be reformed. When you're trying to see the Trump administration skew the visa system towards higher earners, towards higher wages, and just people with more capital to spend in the United States, does this make sense when it comes to the potential economic benefits for the U.S.?
Yeah, I mean, again, I know no one who would say the H-1B program is perfect. So I think certainly raising the minimum pay for workers, would be a very good thing. Making it easier for people to change jobs here. I mean, I don't, for my part, I think most people agree with this. We don't want workers to come here as indentured servants where they're tied to, if they sign up with Microsoft or whoever and they aren't treated well, they get a better offer. They should be able to go there. So making it easier for workers to change jobs, raising the minimum. I mean, there's other changes, but those are big ones. And again, if Trump were to put those on the table, I think he'd have bipartisan support.
Dean, great to get your insights. Thanks so much. Dean Baker, senior economist at the CEPR. Now, some other global headlines we are following. Australian Prime Minister Anthony Albanese says he'll meet with President Trump next month in Washington. That's months after a planned sit-down on the sidelines of a G7 meeting in Canada was cancelled due to Israel's conflict with Iran. Albanese had come under political pressure over his failure to secure a face-to-face meeting almost 9 months after Trump's return to the White House. The European Union and Indonesia have secured a trade deal that will eliminate tariffs on most goods. Officials from the two economies signed the deal known as a Comprehensive Economic Partnership Agreement, concluding nearly a decade of talks. The bloc's trade chief says the agreement will save European exporters around $700 million in tariffs. The OECD says the global economy is still on course for a substantial hit from President Trump's trade measures, despite showing greater resilience than expected in recent months. The organization lowered its 2026 global growth outlook to 2.9% from 3.2% this year, and also sees slower expansions in the US, Euro area, and China. The OECD notes that the full impact of higher US tariffs has yet to be felt.
The tariff shock is bringing more inflationary pressures in many countries. So we expect that there will be additional price impacts for firms, not only in the United States, but other parts of the world too. So I do think that the overall picture is one in which you have additional inflationary pressures from tariffs.
More ahead on the Asia trade. This is Bloomberg.
Super Typhoon Ragasa lashing Hong Kong. The world's most powerful storm this year will be closest to the city in the next couple of hours. You can see that live image from the window. You can barely see anything. Winds sustained of 195 kilometers per hour, the highest level hurricane signal number 10, remaining in force for some time. Heavy rain, water levels rising by as much as 2 meters. The China Show co-anchor Yvonne Man hunkered down in Hong Kong. Joining us right now, how bad is the situation on the ground?
Yeah, we're certainly in the thick of it, and I can still hear the wind howling in my house, right? That's why we're not in the office here today. But yes, I haven't seen something like this for some time, right? You talk about being the world's biggest storm this year, but really it's the worst for Hong Kong since Mangkhut back in 2018. And you know, it's really packing the punch, right? When you're talking about sustained winds north of 200 kilometers per hour just a few hours ago, it was like a flip of the switch. And a lot of us couldn't sleep because I think around 3 a.m., that's when I woke up and started seeing, windows were certainly rattling, and you could hear certainly the howling of the winds as well, and a little bit of leaking around my neighborhood as well. So certainly this is going to cause quite a bit of damage. We of course, we're still tallying what the sort of impact this could be, but we have stories of traders really taking over the Mandarin Oriental here in Hong Kong as they hunker down and start to work either from hotel or from home here. From what we've heard from the Hong Kong Exchange, they're going to remain operational. It was just last year, right? The end of that decades-long practice of shutting markets during these severe weather storms. So certainly they're putting this the biggest test yet, really.
Yeah, and I think some of our anchors are also taking over some of the hotels in Hong Kong. Yvonne, we'll speak to David in just a bit. But, after hitting Taiwan, the Philippines, Hong Kong, where does the typhoon go next?
Yeah, I mean, it's crazy, right? It's been a weird weather season in Hong Kong already. I think it's since 1946. We talked about 19 of these T10 typhoons have been recorded. And it's only once in 6 decades where we've actually seen 2 T10s in a calendar year. So it's quite rare. And we've seen it not just in Hong Kong, right? So southern China, we were talking about, Macau is now looking at whether to raise their storm surge alert to the most severe. They're expected to deal with some of the worst flooding later on this morning into the afternoon. The typhoon is expected to skirt around the southern Chinese coast here over the next few days as well. So it's not quite over yet. And then it's going to start heading west towards Vietnam. So we already talked about Hong Kong flights have been suspended in and out up until, I think Cathay Pacific has been canceling all their flights up until Thursday. And also Shenzhen and Macau airports remain closed for unspecified amount of time. Railway services in Guangdong province, for example, have already been suspended as well.
Brace on the mainland as well. Yvonne, thanks so much. Stay safe out there. The China Show co-anchor, Yvonne Man, and we're, of course, less than an hour to those markets opening in Hong Kong, mainland China. The equity rally, maybe that's at risk as well. Let's bring in our China Show co-anchor, David Ingles, for a preview. David, what are you watching?
Yeah, well, I mean, the fact that, let me just continue Yvonne's point, right? The fact that there is trading today just speaks a lot about how much the business continuity plans have really taken shape here in Hong Kong, right? So a bit of color, right? So I'm one of the hotels here, and we actually picked this specific hotel simply because I could get to almost anywhere in Central without exposing myself to the forces of nature, right? So if I needed to come into the office, the reason I mentioned that was coming into the hotel yesterday, familiar faces in the industry, right? So effectively, I'm not going to say where I am exactly, but you do see, like this video you're showing right now, I shot that this morning, stepping out a little bit outside through the IFC mall, right? And for those that are familiar with the sort of trappings around this area, right? The IFC, which is a massive skyscraper here in central Hong Kong, actually connects into the mall. And a lot of familiar faces across the industry are actually staying here and around it. I was told by some of the hotel staff around it too. And I think it just underscores the fact that inside it is business as usual. And the reason I bring that up is you're getting things like IPO pricing, loan syndications being signed as well. So apart from that, just to answer your question more directly as far as markets go. So I'm watching three specific sectors today. One, live streaming and e-commerce on the back of that announcement yesterday that we could get more rules around that. And we might expect some pressure to come through across the e-commerce space. Just in the last, I would say 30 minutes or so, Morgan Stanley has come out and upgraded and reiterated their preference for AI. And along those lines, Kingsoft Cloud also coming in and tapping this market to the point I was making earlier of business continuity, business as usual, tapping the markets for more funding. So we're looking at a lot of those stocks. And obviously, I'm also keeping my eye on HIBOR, which effectively has now returned to the highest level since May. And yeah, if you didn't look outside your window, if you didn't follow weather forecasts, you wouldn't know there's a massive storm outside, apart from the fact that buildings are literally shaking around the city. Back to you guys.
Yeah, very interesting. I mean, unimaginable just years ago when I lived in Hong Kong that you would get a typhoon and you wouldn't have trading affected. But when it comes to that rally that we've seen in China, that might get affected. Perhaps we continue to see more headwinds on that market, especially with immense rally for the past 5 months or so.
Well, I guess which is why you're getting a lot from the sell side coming out more specifically and more targeted advice. You know, I just mentioned Morgan Stanley as it pertains to AI, for example. I think when you look at the benchmarks themselves, let me just mention Shanghai Composite, the graphic we just showed. 3,800 has been a level that we've been tracking the last few weeks or so. We've been consolidating at around that level. And I think more importantly, it's really found some very strong support on that level. So the plays really have been not so much beta, not so much the index, but yeah, the sort of idiosyncratic themes. And AI continues to give, and that is certainly one specific sector I'll be watching as we go into the open today. Not to mention, you guys have been covering Micron, Taiwan export orders, all those things coalesce into one theme. And I keep repeating myself, it's AI, of course. And yeah, that's certainly something we'll be keeping an eye on as markets remain open under this T10 typhoon storm.
On AI and tech plays, Dave, I mean, it's interesting, right? One of the high-profile investors that I know you've spoken to, Cathie Wood, she's jumping into Alibaba at the time when it's already at multi-year highs.
Well, if you believe some of the sell-side research that, yes, I mean, the rallies come quite rapidly, right? So I think some people who sold out below $100 might have been regretting that decision because they're now pushing 140, 150. And if you listen to some on the sell side, it's actually very early in the rally because I think what's really happened is, and to your point, right? So I think Cathie Wood and her team actually put out their daily trades at the end of the trading session, right? So I think what she did was for two of her strategies, she added back Alibaba for the first time in, I think to your point, 4 years, right? So if you believe some on the sell side, this is just getting started. And the fact that recently, I'll mention Alibaba, I'll also mention Huawei, right? So last Thursday, for those that missed it, Huawei actually put out quite a detailed roadmap over the next 3 years that effectively what they're saying is we're not at the level of NVIDIA just yet, but here's a path toward that direction. And I think this re-rating that's taking place in the market right now has really been enough to drive share prices even higher. And the likes of Cathie Wood that stayed away from this specific name, for example, is back in. So I think one thing to watch is how does she then manage that exposure on a day-to-day basis. And again, to your point that we were making earlier on, they do disclose their trades on a daily basis.
Right. China show co-anchor David Inglis, they're hunkered down in Hong Kong at a hotel during this super typhoon Ragasa. Do stay safe. We're getting the latest lines, reports that we have already seen some deaths in Taiwan, 14 killed, 18 injured in Taiwan's Hualien as the typhoon now hits. We have more ahead on the Asia trade. This is Bloomberg. We're seeing some downside across benchmarks in Asia, with the Nikkei holding steady at the moment after rising to record highs. Remember, it's coming back from a holiday with the Japanese yen pretty range bound. We've been watching JGBs very closely in Japan because we heard from a front runner in the leadership race there, Sanai Takaichi, talking about issuing government bonds that could become unavoidable in order to deploy measures to fight inflation. And yields on longer and maturity bonds have already been pretty high, and you can see 30-year yields continuing to rise while 2-year yields and 10-year yields are down at the moment in Japan. Over in South Korea, we are watching those Korean chips. We've got Micron higher following the strong fourth quarter results. We're also watching defense stocks on rising geopolitical tensions between Russia and NATO. But overall, really is the energy stocks leading the gains on the Kospi, despite the overall benchmark being to the downside of 0.4% because of the rise in oil prices, Avril, given, of course, the geopolitical tensions I mentioned.
Yeah, we're seeing that bullish momentum, not just in oil prices, right? Really with diesel as well. And this is investors, I guess, doing a bit of repositioning given how there seems to have been a bit of a shift in tone from Donald Trump when it comes to NATO versus Russia as well as Ukraine. And we also know how Ukrainians struck Russian refineries. There also seems to be some concern about Russia restricting exports of diesel. So all that is in play for the moment. We're seeing S&P 500 futures not really giving us that much direction. TAIEX also pointing to some upside. And some of the stocks that we're also going to be watching when markets open in Hong Kong and mainland China, including Alibaba, after Cathie Wood's funds reopened positions in the stock for the first time in 4 years, as we were talking about with David just a while ago. Lots at play. And of course, we will watch the China market open. This is Bloomberg.